Hello everyone, this is Matthew Fraley with BreakpointTrades.com. This is the technical analysis review of the market, and it is Monday, February 3rd, 2025. As you know, it's been a wild last couple weeks, wild weekend with the Trump tariffs and all the shenanigans. Anyway, got a lot to discuss. Going to get through this as quickly as possible. Again, my name is Matthew Fraley. I founded Breakpoint Trades 21 years ago in 2003 to provide the best technical analysis on the planet. Awesome newsletters, trade ideas, amazing mechanical systems, which was one of my personal passions. And if you're just a YouTube subscriber, you should really consider subscribing. Click the enroll button and sign up, or at the very least, consider joining our free newsletter. Okay, and I send out usually 1 or 2 free newsletters per week. But again, if you're a subscriber, you get access to our systems, etc. So you're missing out if you're only a YouTube subscriber. Okay, let's get back to this market newsletter at hand. As you can see, newsletter is divided into 7 major sections. I'm not adding any trade ideas tonight, guys, not in this volatility. But first off, let me recap again. Most of you should have already watched our weekend newsletter from Steve Nelson. By the way, administration note, Steve Nelson will be traveling. He'll be leaving on Wednesday. He'll be gone until Sunday. He's going to Cabo, so he'll be on vacation. And I'll be doing that once or twice this year later on as well. Anyway, again, just to recap, it's really honestly, guys, it's been very wild action since last Monday. As you know, last Monday, the market sold off hard on the Chinese AI DeepSeek, but it then recovered the rest of the week. And in fact, the S&P 500 nearly testing its all-time highs last Friday. It basically hit the supply zone, pulled back, and then early that Friday afternoon, Trump announced a 25% tariffs against Mexico and Canada and 10% against China. Well, the market sold off hard on Friday into the close. I actually took some shorts home on the S&P 500. Then there was all sorts of doom and gloom, as you know, on the weekend, articles, etc. And for good reason. A lot of people concerned. I mean, the Fed has been fighting inflation, and this could just completely undo that. So futures, when they opened on Sunday night, were strongly down. That translated to a big gap down in the cash market today on Monday morning. But the market, shortly after the cash market opened, Mexico was the first to reverse course. They pushed the tariff off until March. We're going to have further discussions with President Trump, and they said they would also send troops to the border. The market recovered quite a bit intraday, nicely off those market lows. And then late in the day after the cash markets closed, Canada reversed course. They moved those tariffs off until at least March. Trump has done the same, by the way. And they said they would add further border security. The point is, this is a very fluid-driven market that can reverse both to the upside and the downside on a dime and on a tweet. Okay? So, for example, I took my shorts off right away this morning because I knew things like this could happen. They could move the S&P 500, 50 and 70 points in, 5 or 10 minutes. So it remains the same. That said, guys, for the bulls, so far they've held key supports, the S&P 500. The bullish case would be we completed a 3-wave ABC correction. The same for the NASDAQ. Or it could be a more complex coil. The bearish case would be the lower high on Friday was a wave 2, and we're eventually going to go down on a wave 3. That said, the bulls held key support, so we'll favor that for now. Like I said, this is a fluid situation. Now, as far as news items, we're still in earnings season. Most of the S&P 500 companies have reported, but we have Google reporting tomorrow. Okay, and on Tuesday, Amazon reports on Thursday. We got a bunch of other news, possible Trump stuff that could come out on a dime. And of course, much economic reports. But that said, the big one is the non-farm job payroll report on Friday. Next, item number 2, this is the first image. So I'll show this later on again, but here's a 60-minute chart of the S&P 500. And I think this really illustrates it pretty quickly. So you can see the lows the previous Monday. You had the nice move up in the market. You can count 5 waves up. Okay. So we were looking for a correction and we got that. Or actually, the previous Monday was right here. So at the time, I was wondering if this was a wave A. That was when we had the DeepSeek news. Then we had a reflexive ABC 3-wave bounce throughout the week into last Friday. Okay. And got right into that supply zone just shy of the highs. All right. That was an area to pull back. Well, then you got the Trump came out and announced those tariffs, and then boom, big sell off on Friday. And then, of course, the gap down this morning. But anyway, that was a 3-wave move up. So under the bullish case, that would be a wave B. The bearish case would be a wave 2. Then we got the move down today, which under the bullish case would have completed a wave 3. Okay. The bearish case would be, we're in the midst of a wave 3, and this will ultimately form a higher low or lower high. So we'll see what happens. Again, I'll give it to the bulls for now since they held that key support. But again, this is a fluid, dynamic market. But one point is, guys, that 3-wave move up last Friday into supply, that was an area to take profits or to take a hedge regardless way before Trump said anything, because that was right into supply. You had 3 waves up. Okay, I don't buy supply myself. I sell supply and then I look to buy on a pullback if I think it warrants it. All right. So now we'll see how it reacts the rest of the week. It's going to be quite interesting. Next, item number 3 shows the index sector table, what transpired today. You can see major indexes, again, even though they closed off those lows quite a bit, they still closed down. S&P 500 still closed down 0.75%, at about 45, 46 points. The Dow, which has been holding up the best, closed down 0.3%. NASDAQ, 1.2%. Russell 2000, 1.2% as well. The 21 market sectors, obviously most of the sectors were down today. Transports appears to be the largest drop today in the sectors. Currencies, US dollar, as you'd expect, was up nicely. Now, overnight, it was up 1.4%, so it did pull well off of those highs. Okay. Cryptocurrencies, Bitcoin, back over 100,000. Overnight, it was down to something like 92, 93,000. Ethereum was down something like 25%, so it had a nice recovery. Commodities here, DBC was up 0.8% today, slight decline in crude oil, but most of the commodities were up here. Natural gas had a big rebound, up 9%, copper up 1.15%. Most of the ags were up, as you can see. Coffee continues to make new all-time highs. And precious metals gained, obviously, in this volatility. Gold up 0.5%, same for silver. GDX, the miners, up 1.5%. Platinum was down. And as far as the bond market, pullback in the 10-year 30-year Treasury yields. Next, item number 4 shows the economic news calendar. So tomorrow we have factory orders, JOLTS. Again, a lot of different economic data. I'm not going to go over all this. We have the jobs report on Friday. That's a big one. Of course, Google reports tomorrow. Amazon reports on Thursday. You can check from the earnings calendar. And moving to the charts, here is Google. This reports tomorrow. It's been holding up very well. Again, we'll see how it reacts to earnings. Next, chart number 6, here's Meta. Now, Meta has been outstanding and really holding up. Had a beautiful coil, which we had as a long idea. Broke out a couple weeks ago, and it's held up like a champ. All right. NVIDIA, not so much. Some of the other ones, but this has held up well. Next, move into the indexes. So chart number 7, here's the daily chart of the major indexes. So again, you can see the action today. You can see the nice close above the morning lows. And we'll see how things work out the rest of this week. Moving on to the S&P 500 charts, here's chart number 8, the weekly view. Just showing you this because it's showing the bigger picture. The uptrend channel still remains intact. Today's lows basically testing that little flag channel that was broken a few weeks back. Still holding that for now. And chart number 9, here's another weekly chart I've shown. So eventually when we do form a confirmed high here, we're looking for this to be a wave 5 of 3. All right, it's possible it's in now. We still have that labeled as an alt. But eventually once this is complete, we're looking for a deeper wave 4 correction in the market. Could be pretty substantial, 500 to 900 S&P points. But otherwise, in the short term, if the bulls can hold this and maybe push to one more high, so we'll see. Next, chart number 10, here's the S&P 500 KISS system. No changes, it's still long. You can see the ATR there, price is still holding that as well. Moving average ribbon is still bullishly stacked. Again, a lot of choppy action here lately, obviously. Chart number 11, here's the 4 time frames. You can see how price pulled back perfectly off the resistance cycle in the daily. Again, we're still above the ATR. You can see we have a support cycle on the half day, so that's a positive. You can see that nice pullback from that DeMark 13 from a couple weeks ago. Moving back to the standard chart, chart number 12, here's the daily S&P. So there was a little open gap which we filled last Friday. Remember, we got really close to those previous highs before pulling back. Look at today's lows. It tested that extended broken trend line. So bulls held that critical support for now. So far, we have a simple 3-wave pullback, which under the bullish case would be an ABC. Chart number 13, here's another simple chart just showing supply and demand. We stalled at supply last Friday. For now, bounced off a little demand zone. Chart number 14, another S&P 500 chart with some fibs here. So today's lows also got really close to that 61.8 fib. That's always an important area, and so far we've held that. But again, we'll still have work to do. Chart number 15, here's a 2-hour view. Without a bunch of indicators, just showing some of these gaps. We filled a few of these gaps. By the way, we have an open gap from this morning. Okay, we didn't quite fill that. And there's a bigger gap below. Under the bullish case, really wouldn't want to fill that. It's quite deep. But again, we'll see how this action unfolds. And finally, chart number 16, here's that 60-minute chart that I showed first off where, again, bullish case, you have an ABC completed perhaps. But, onus is still on the bulls here, and we'll see what develops tomorrow. Next, chart number 17, here's the triple Q's KISS system. No changes here either. Price is above that ATR for now. Chart number 18, here's the 4 time frames. So you can see we got a resistance cycle on the daily up here, just showed up. We're above the ATR. Half day, we're bounced a little bit from this support cycle. This is pretty choppy, so I'm not going to comment too much on all this. Let's just move back to the regular charts. Chart number 19, here's the daily chart. Again, same chart as I showed last week. Today's lows did not take out the previous, that 510 higher low. So we'll see how this action develops. Remember, Google reports tomorrow, Microsoft reports on Thursday. Chart number 20, here's a 2-hour view, just showing some of these gaps. And here I added some fibs. So again, potential ABC perhaps, or more of a coil. Chart number 21, here's a 2-hour view. This shows you the potential coil-like pattern that can form as well. So like I said, guys, unfortunately, even under a bullish case, there's a myriad of options here in the consolidation pattern. Okay, could you have a simple ABC? You could have a more complex coil, etc. Or if things wanted to unwind and the rhetoric goes crazy again between Trump and these other nations, who knows? So let's move on. Chart number 22, here's IWM small caps. So again, they closed off their lows today, but it clearly stalled right at that 50-day moving average the last couple weeks. Okay, still above its 200-day moving average where it bounced from in early January. And chart number 23, here's the 2-hour view. So again, another way to label this would be this pullback as a simple ABC. You notice we almost filled that open gap before bouncing. All right, that does it for the indexes. Moving on. Chart number 24, here's the VIX. So surprisingly, guys, not a lot of fear yet in this market. So, boy, it seemed like there was, especially with all the worry on the weekend, even just talking to neighbors and family, all freaking out. But, the VIX opened today at 20.4 outside the Bollinger Bands, but not very much. I mean, with all the rhetoric on the weekend, you would have thought the VIX would have opened up at 30 or something, but still quite muted here, as you can see. Closed back inside the bands. Chart 25, here's one of these McClellan oscillators. Again, we've been showing this for a couple weeks. You had a bearish situation here where you had a lower high on the McClellan, breadth, and a higher high on the S&P. And so far that's led to a correction. Following up on some of the important market sectors, here's XLK Technology. We have it as an expanded pattern and expanded coil pattern. Anyway, just chopping around here. Still above the 200-day moving average for now. Last week's rally stalled around those bunched up moving averages. A lot of work to do here. Chart 27, here's the semiconductors. This area is, look at the chop here. Very choppy. It's been holding this demand zone, but you had the DeepSeek news and the moves in NVIDIA. So this area has been struggling quite a bit. Chart 28, here's transports. After a nice rally off that 200-day moving average from December, they've pulled back here nicely and quite a bit off the highs today. This rallied up to that 70 area, which you could see was, the previous lows of those candles. That's resistance. Chart 29, here's the Dow theory chart that Steve showed in the weekend. And you can just see the transport Dow ratio. It has been declining sharply here. So just something to be aware of. Chart 30, here's biotech. So that last rally stalled right around the 200-day moving average, pulling back now. Chart 31, financials. The banks and financials have been quite strong. Little pullback today, but off those highs, again, holding up extremely well. Nice rally off that demand zone back in early January, off that nice divergent low. Chart 32, materials. Nice rally as well off that demand zone from early January. Remember, we had that in place ahead of time. Otherwise, Pat actually doesn't look too bad here. Kind of a flag look. Nice volume pickup today. Chart 33, XOP consumer staples. Also a nice rally off that demand zone in early January and potentially flagging here. You could take it. Volume patterns look quite bullish here. This actually looks pretty good. Unfortunately, this is a defensive sector, so if this were to break out and rally, maybe not be good for the market, but looks pretty good. Chart 34, healthcare. This also held up very well. Remember, it broke out of the channel, had a bullish symmetry break, holding that 200-day moving average. You can see today's lows held that. Energy sector, here's XLE. Wild action here in the last couple months. V moves. Big V move up down from that November, December high off the top of the range. V move off the mid-December low off the bottom of the range. Pulled back from the supply zone. Now, today's lows tested that 61.8 fib. I think that was a lower risk area to attempt a long, perhaps. Okay, been looking for a higher low here. Here's a clean view of the XLE. So you can see it testing that 61.8 fib. So I took a stab here at a long, right around there. We'll see if that works out. Chart 37, oil services. Last pulled off the supply zone. Today formed a doji candlestick. Some other things to keep an eye on, guys. Emerging markets. Now, here's an interesting chart Rick Kwan made for me, who works for the website. This is the EEM SPY ratio. So clearly, since 2011, emerging markets have greatly underperformed the S&P. Look at this. This ratio is around 0.35, 0.37 back in 2011 and 10. It's now 0.07. It's buried. So eventually we're going to see this outperform the S&P. But I really like this indicator here, the special K. This is by Martin Pring, I think. It uses a couple different time frames. But this appears to be pretty good signals below this. When it crossed below the red line here, that was a great sell. And look how it's been testing the red line here. It's getting really tight. So when this crosses the red line up, that could be an objective long for emerging markets on a macro scale, not just for a simple trade, but a macro. And here's a very cool chart. This is the same EEM SPY ratio, but it's at a Renko chart. So each Renko box is 0.1, all right? And I have it with parabolic SAR, and this is another great little indicator. So you could also wait for this to finally cross over the 9 EMA and give you a parabolic SAR buy. Again, that could be a potential macro long. Something to keep an eye on. Moving on to commodities, chart 40 DBC bouncing a little bit today. Remember, a couple weeks ago, pulled back off of that supply zone. We'll see if it can form a higher low here. Chart 41, here's DBC on the weekly. Again, it's been in this range here, as you know, for the last couple of years. When this breaks out of the range, this could be a quite substantial move. And here's the chart that I'm looking at, the DBC SPY ratio. This wedge, remember I talked about in December, which broke out in early January. Pulled back. I've been looking for a higher low here in another rally. Notice how it's trying to curl up. Now, if this were to rally again, boy, that may tell us that the S&P doesn't have too much juice here, because anyway, just something to be aware of, guys. One trade you could do, perhaps, if you don't want to guess, could be a pair trade. You could go long go long DBC, short SPY. So it's like a pair trade. Next, chart 43, crude oil. Remember, it pulled back off supply zone a couple weeks ago. So got a demand zone down here. A little bounce today. Chart 44, UNG natural gas. Big rally today, up 9%. So it had pulled back, tested the 50-day and week moving average, 50-day moving average last Friday and 200-day. Notice how they both came right in there. To me, it looked very low risk. I actually took a shot long last Friday, and boom, nice gap today. Remember, UNG was struggling with the 200-day moving average for the last year and a half. That changed in December when it finally broke it and held it. So I was looking to buy that. Leveraged way to play it was Boyle. That's the 2X. Nice gap. That's up 18% today. And here's the 60-minute chart of Boyle. The evidence that I was showing last week was this MACD divergence. And if you count this, you had 5 waves down. 1, 2, 3, 4, 5. So if you ever have 5 waves and a divergence on a MACD, that's usually golden. Chart 47, copper, slightly up today. Again, I'm just showing the weekly here. It's been in this kind of coil range for the almost last year or so. Chart 48, DBA agriculture. Remember, broke out of that coil a few weeks back. It's been holding up very well. And the bigger picture weekly chart. Got to pat myself in the back. I talked about this cup and handle last year in 2024 in January and February. Well, that obviously played out big time. Moving on, chart 50. Here's the 10-year Treasury yield. Down today, but still trying to hold that 50-day moving average, so you want to keep an eye on that. Chart 51, high yield corporate. Still hanging in there pretty good. Now the weekly chart of high yield corporate, still holding in there, but it is setting up to a potential high here sometime soon. Look at that MACD, look at that RSI divergence, look at the MACD divergence. So just something to be aware of. Moving on, chart 53, here's Bitcoin. So Bitcoin on the weekend had a big move down, but then recovered. Okay. And here's Bitcoin on the weekly. Again, we do have a potential wave 5 high in here forming, so just something to be aware of. And chart 55, here's Ethereum. So on the weekend, Ethereum pulled all the way down to 2,100. Remember, it was 4,100 in December. But the point I want to make, guys, Bitcoin cryptocurrencies are not a hedge against the market. So don't think that, owning crypto is going to save you on a market crash. No. Bitcoin and these cryptos tend to move with the stock market. They don't tend to be hedges, okay? So I know people think, oh, Bitcoin, it's limited how many Bitcoins there are. But it still follows the general market. It's not really a hedge, okay? In chart 56, WGMI, here's a Bitcoin miner ETF. Been showing this. It's been holding that 200-day moving average. You can see tested it again today before bouncing. Chart 57, US dollar was up very strongly overnight, about 1.4%, but pulled off those highs. Chart 58, Japanese yen. Been trying to hold this double bottom here. That's perhaps hope that the dollar could be topping, but we'll see. Remember, all that tariff stuff and uncertainty actually causes strength in the dollar. That's why the dollar was up so strong in the morning before, you had the Mexico and Canada news. Precious metals, chart number 59, gold up 0.8% today. Remember, we had that basically three-wave ABC coil. That's played out nicely. Honestly, the 3,000 round number isn't too far away. Now, there's no MACD divergence on the daily, so that's a positive. Chart number 60, here's the ETF GLD. Little extended here short term. Notice the doji here. Chart number 61, here's the weekly chart. Again, just beautiful chart. We've been up this very strong uptrend channel since breaking out of this long-term base. That said, guys, the daily chart looks good, but the weekly here, I am concerned that, maybe this will have some sort of top soon. Notice the RSI divergence. Again, that's not a sell signal on its own. Notice the MACD divergence. Again, we are pretty close to 3,000, so markets love to test those round numbers, so maybe we go up to there. But we are working on a wave 5 of some sort, so just be aware of that. Chart number 62, here's a chart from TradingView. I'm not sure whose this is from. Steve gave me this, but this shows some fib extensions. So one fib extension is 28.19, the 2.618, and there's a 3.618 fib at 32.79. So those could be targets perhaps to the upside. Chart number 63, silver. You can see the pullback today, but found support at the broken trend line. So that's now your support. I love silver, and silver's not really overbought like gold at all. So, chart number 64, platinum. Steve talked about this on the weekend. So, pulling back here. That said, I think platinum is something to watch for a macro move. I'm going to be doing a separate video on that. But platinum is 30 times rarer than gold. It's historically, one of the lowest it's been compared to gold. And demand now outstrips supply for the last year. So I think over time, platinum is eventually going to rally. I think platinum can over time double, guys. Here's the platinum gold ratio just to show you. I mean, the ratio is at 0.35. Okay. It used to be over 2. So it is historically the most oversold relative to the gold it's ever been. Chart number 66, palladium, another one I'm interested in. It's forming a nice base here. Look at that moving average ribbon pinching, trying to curl up. Looking at the mining stocks, here's GDX. So right now it's testing the 61.8 fib retracement from the recent highs. So it could be a little sticky area in the short term, but maybe forms a higher low on a pullback if we do. Here's the weekly chart showing the same thing. I've been given some ideas in the precious metals lately. Here's KGC, which popped last week. Here's AEM, which popped just over a week ago out of this coil. Nice move. And of course, here's the weekly. Just beautiful coil there. And you can see I had a big coil previously that broke out in 2024. Chart number 72, just some other ideas, guys. I'm not putting any new ideas out, like I said. Here's MTA. This was a recent idea last week that's played out. Chart number 73, RKT. We did have a bullish symmetry break here, so I'm looking for a higher low, but I need a trigger. Maybe the 20-day moving average if it pulls back to there, etc. All right, guys, that'll do it. Quick check on futures. ES futures are up 20 points this evening, so things are looking okay. We'll see how things look tomorrow. And let's just see how things look the rest of the week. Take care, everyone.